Welcome to the 96th episode of Kanga Crypto News, your weekly briefing for crisp updates from the crypto world. I'm Patricia here to bring you the latest developments and the stories that matter most. Before we start, a quick note. Everything you hear on Kanga Crypto News is researched and prepared by our expert, but this is not investment advice. We release new episodes every Friday, so stay on top on the most important moves in crypto. Subscribe to the channel and tap the notification bell so you never miss an update. Let's get into it. Let's start with politics meeting crypto markets again. On February 13th, a Trump-linked entity connected to Truth Social filed with the SEC for two crypto exchange-traded funds covering Bitcoin and Ethereum. The filings aim to launch regulated investment vehicles tracking spot BTC and Ethereum exposure. This is significant for two reasons. First, it signals that politically connected organizations see ETFs as the primary gateway into crypto capital markets. Second, it adds narrative weight to the ongoing ETF race, which already reshaped Bitcoin flows in 2024 and 2025. Bitcoin traded around $68,000 this week, after briefly pushing about $70,000 before pulling back. Ethereum hovered near the $3,400 range during the same period. Market reaction was muted, but the symbolic weight of politically branded crypto ETFs is substantial. If approved, these funds will further institutionalize access, particularly among retail investors aligned with political networks. Now, let's look at how institutional money is actually rotating. Harvard's endowment disclosed roughly $87 million in the new Ethereum ETF exposure, while trimming part of its Bitcoin ETF allocation. That's a clear signal of asset rotating rather than withdrawal. Large institutions are not exiting crypto, they are relocating with it. This comes at a time when Ethereum narratives are increasingly tied to staking yields and tokenization infrastructure. Speaking of flows, digital asset investment products saw approximately $173 million in net outflows last week. However, XRP and Solana funds attracted roughly $64 million in combined inflows, suggesting selective appetite rather than broad risk-off behavior. That divergence matters. It suggests investors are rotating towards assets. And now, to traditional finance sentiment. JPMorgan analysts stated that institutional inflows could drive recovery across crypto markets later in 2026. Their thesis centers on structured products, ETF demand, and improving macro liquidity conditions. This marks a shift from the caution tone seen earlier this year and reinforces the idea that banks are preparing for renewed participation. But not all banks agree. Standard Chartered analysts warned that Bitcoin could revisit $50,000 if macroeconomic pressure intensifies, particularly if inflation data surprise to the upside. That forecast contrasts sharply with JPMorgan's outlook. It highlights how fragile sentiment remains around macro variables like interest rates and dollar strength. Now to derivatives markets. XRP's founding rate dropped to its lowest level in 10 months, signaling heavy short positioning. Historically, deeply negative founding has sometimes precedes sharp rebounds, but it can also signal sustained bearish pressure. Meanwhile, analytics platforms reported XRP trader sentiment improving relative to Bitcoin and Ethereum sentiment, which softened during the week. This divergence suggests positioning in becoming more asset-specific rather than sector-wide. Bitcoin briefly reclaimed $70,000 before settling near $68,000 during the reporting window. Volatility remains moderate, but liquidity conditions appear thinner compared to late 2025 levels. Traders are closely watching macro catalysts, including inflation data and ETF approval timelines. Overall, this week showed rotation, not retreat. Politics entered the ETF narrative again. Harvard rotated toward Ethereum. Funds saw outflows broadly but inflows into selective altcoins. Banks split between bullish recovery and downside caution. Short-term sentiment remains fragmented and macro-sensitive, and long-term infrastructure and institutional pathways continue expanding. That's today's Kanga Crypto News. If you enjoyed this episode, like, share and subscribe to stay ahead in the crypto world. See you next Friday.
We are Kanga, beyond crypto.